Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's a brand new day and we have plenty of news, be it from the market perspective or for that matter, political shifts. But yes, politically shifting news that is coming in from Nepal as well, where the Prime Minister has resigned on the back of violent protests that have erupted on the back of social media ban and which eventually got escalated to a corruption fight as well. So quite alarming visuals have come in from there with protesters setting torch to Prime Minister's private home and even Parliament. The army has taken control of Kathmandu airport and several airlines have also been cancelled at this point of time as well. So yes, we'll be watching out for more news on this particular front as well. It's a developing story and we'll be keeping a track of that as well. But yes, back to markets. US President Donald Trump, he doesn't fail to disappoint. On one hand, he has said that the US-India relationship is intact, but on the other, he has also urged, several of the media reports have suggested that he has urged EU to impose up to 100% tariffs on China and India for buying Russian energy. So while we have reports suggesting that both the US and India officials are expected to meet as soon as this month itself to meet a common ground on the trade barriers that they have seen, but whether or not this something is happen is something that we'll be keeping a track on. But yes, it's a first good sign of both the sides trying to ease out the tariff conflict that has been there from the past 1.5 months as well. But yes, apart from the tariff conflict, we also have the crucial PPI report which is due today from the US, which will shape the Fed's policy trajectory next week. 95% of the futures have been pricing in about 25 basis point or rate cut as soon as next week itself, and an outside 50 basis points has also been taken subject into the markets as well. But yes, coming to how the markets have performed overnight, US markets did end on a higher note with all three benchmark indices ending on a record high, while Asia Pacific markets have also started the day fairly on a positive note. Coming back to how our markets are going to react to it, trends in the GIFT Nifty have been suggesting to a positive start for the markets, but whether or not Nifty sustains this 5-day winning streak to the 6th day is something the bulls have been waiting for and will be watching out for as well. Now we'll understand and we'll get in our experts to understand how you should position yourself in a trade environment like this. We'll also be addressing your stock related queries, so keep posting them on our live feed and we'll take stock of that as well. But before we get deeper into the show, let's take a quick check of the top headlines this hour. Stocks on Wall Street end higher overnight with all three benchmark indices closing at record highs despite the job worries and looming inflation reports. The Dow Jones surges over 200 points while Asia markets have also opened higher. The GIFT Nifty is also indicating a positive start for our own markets. US President Donald Trump says India and the US are continuing negotiations as that he will be speaking to Prime Minister Modi in the coming weeks, but also asks European Union to hit China and India off up to 100% for purchasing Russian oil. Crude oil prices settled higher after the Israeli military said it has carried out attack in the Hamas leadership in Qatari capital of Doha. Gold prices also rose on the hopes of an outsized rate cut hopes. Apple announces the launch of iPhone 17 and iPhone 17 Pro apart from a game-changer slimmer iPhone Air and a new variant of AirPods that feature live translation. Prices of iPhone begin in India from 82,900 rupees and go up to as high as 2.3 lakh rupees. And Nepal plunges in political uncertainty with Prime Minister KP Oli resigning after violent protests over corruption and social media ban that has left 22 people dead, including former Prime Minister's wife. Army has taken control of the Kathmandu airport. India has also appealed for a calm. All right, let's take a stock of how yesterday the markets have fared. Nifty did extend the gains to the 5th straight day, up about 24,850 mark as well. And the market up move that was led largely by the IT heavyweights as well. On the back of the Infosys buyback news, whether or not this cheer sustains in today's trading session is something that we'll be watching out for. But yes, broader end of the markets that continued to remain quite mixed. Midcap ended the day on a flat note. However, small caps outperformed from the broader end of the markets. But yes, auto index, which has been rallying from the past couple of sessions, took a backseat yesterday. Some profit booking in the last session, and we could see Bajaj Auto, Hero MotoCorp as one of the top Nifty losers on that front as well. But coming to today, of course, we'll be watching out for PPI data, which will be coming in from the US as well. That will shape in the US Fed's policy action, which is going to take place next week itself. But coming from the primary markets, Three new IPOs which will be opening today. That includes the likes of Urban Company, Dev Accelerator and Srinagar House. That we'll be watching out for from the primary end of the markets. But coming to how the pre-open rates stack up at this point of time, Sensex is still showing a little bit of a positive start, 300 points coming in, uptick for the Sensex. Nifty also up about 451 points, quite a gap up opening start that is indicating for the markets. But yes, coming to the fund flows data, FIIs that stood as net buyers in last session. 2,000 crore stocks of worth buying in the cash markets from the FIIs front. DIIs also bought stocks which was worth about 176 crore rupees in the cash markets as well. But yes, coming to the put call ratio, Nifty put call ratio rising to about 1 from 0.95 levels in the previous session. And the stock that continues to be a part of the F&O ban, that is your RBL Bank. And no new stock has been added, nor it has been removed at this point of time. But yes, pre-open rates, that is suggesting a positive start for our own markets. We'll discuss more of that in a bit. But on that note, let's quickly get on board with our technical expert of the show. Joining me is Nilesh Jain, Head AVP Derivative and Technical Research of Centrum Broking. Nilesh, good morning. Nifty has been up for the fifth straight day. Can we expect 25,000 soon, or how does the chart indicate for the upcoming sessions?
Good morning, Lovisha. Well, absolutely. In fact, in last 4 consecutive sessions, we have seen a higher close, so that's a positive development. Not only that, Nifty also yesterday surpassed its immediate resistance of 100-day moving average that was placed somewhere around 24,800 level that has already been taken off decisively. Now, the immediate hurdle on the chart looks like at 24,950, 25,000 zone. So that's the next resistance zone for the Nifty. A decisive breakout about 25,000 will definitely open the gates for 25,200, 25,400 on the back of short covering. And that seems likely because the overall undertone has turned slightly on a positive side on momentum indicators and oscillators front. We have seen a buy crossover on MACD as well as RSI has crossed 50 mark as well. So given this kind of positive setup, there could be possibility of a gradual up move from here. But still, I would rather wait for a breakout about 25,000 to take any sort of aggressive long position. But from intraday point of view, the bias is on a positive side. The buy and decline should be the approach as long as Nifty holds 24,800 levels on the lower side. Now, coming to Bank Nifty, that is a major cause of concern. It has not been participating and not playing any sort of a catch-up role as of now, and that's a bit of worry. We need a strong participation for the from the Bank Nifty, and that will provide more comfort, and the conviction will be higher if Nifty breaks about 25,000. So looking at the overall setup, the consolidation seems likely to be continuing in the Bank Nifty in the zone of 54,000 to 54,500 on immediate basis, and whichever side it will break, we can expect another follow-up move in that particular direction. So ideally, the strategy should be to focus on sectors and stocks because a lot of action can be seen on sectorial front, Nifty, IT, auto, metal. So these are the sectors where we are witnessing a good momentum. So focus should be on the sectorial front, and on index, as mentioned, a breakout will provide more comfort, and then probably we might think about taking any sort of long position in the index.
All right, Bank Nifty participation crucial for the Nifty's up move as well. But yes, IT index that did well yesterday on the back of Infosys buyback news. Nilesh, what can we expect from the IT index? Can we expect it to sustain gains in today's trading session, and any particular stocks that you're watching out from the IT pack as well?
Well, Lovisha, see, Nifty IT index has been extremely volatile. We have seen some bit of uptick yesterday. I'll first talk about the positive. The index is trading at multi-month lowest level. So from a risk and reward perspective, it has found a very strong support at 34,300 level. So that is acting as a very strong support, and keeping a stop loss below the same, a long position can be initiated. Yesterday, we did see some positive development. The Nifty IT index crossed its short-term 21 DMA. Looks like it is heading towards 36,000 level. So structure-wise, the Nifty IT index is poised for another follow-up move on the upside, and within this space, stocks like Tech Mahindra, Wipro, and also Infosys. Yesterday, we have seen a strong move yesterday on the back of buyback news. So we may see a follow-up move in all large cap IT names. Not only that, within mid cap space, stocks like Coforge, Persistent System are the couple of stocks that are also looking positive.
Okay, those are the stocks that we need to keep under our radar as well. But yes, let's also talk about metal space. Multiple triggers that has been keeping the metal stocks under investors' radar. We have the Fed rate cut, which will be, as soon as next week itself, and that is what is keeping the metal stocks momentum in high end as well. But yes, Nilesh, from metal perspective, what are you watching out for, and how does the space look like for you?
We are pretty bullish in this particular space as well. So metal index itself has given a good breakout recently, and we are currently witnessing a follow-up move on the upside. So within this space, aluminum space specifically, that particular space is looking positive to me. Hindalco, Nalco, both the stocks are looking strong on the chart. Hindalco, we are bullish for 760, 770 levels on the upside, keeping a stop loss below 720. Buy and decline should be the approach in Hindalco. And coming to Nalco, we have seen some bit of profit taking after a strong move in the previous week. So this profit taking, in fact, giving a good opportunity to buy in the range of 204 to 205. That could be a good entry point. Keeping a stop loss below 197, and on the upside, we can expect a gradual up move once again towards 216 to 220. Now coming to other metal names like Tata Steel, after a long time we have seen this particular stock has given a good breakout on the chart. So looks positive for a follow-up move to continue towards 175 to 180 from a near-term perspective, keeping a stop loss below 165. So buy and decline should be the strategy in Tata Steel as well.
Okay, those are the stocks that we need to watch out from the metal space as well. Let's also touch base on Nifty Auto Index, because yesterday was the day of profit booking, halting its 4-day consecutive days of rally for the Nifty Auto Index. We did see some laggards coming in from there, Bajaj Auto, Hero MotoCorp, all of them seeing underselling pressure as well. But Nilesh, anything that you're watching out from the auto space, given that it has been building gains on the back of the GST rationalization measure?
Avisha, absolutely. So, as mentioned, we are also bullish on Nifty Auto space as well. It is on the verge of a multi-year breakout. In fact, a one-year consolidation, if you see on the chart, last year in the month of September, this particular index made a high of 27,696. And since then, we have seen a long consolidation of a 1 year. Now, once again, it is making an attempt. It is likely to cross the high of that particular level of 27,696 going forward, and that's what we are expecting. So Nifty Auto looks strong on the chart, although we have seen some bit of pause yesterday after a strong momentum that we have seen. But I think if at all you see any sort of profit taking, use that dip to buy and buy quality names within two-wheeler space. We are very much bullish on TVS Motor, Bajaj Auto, and also Hero MotoCorp as well. In fact, Bajaj and Hero has been a little bit underperformer, but looking at the overall setup, we expect this momentum to continue, and also Aishvarya as well, which is trading at all-time high. Now coming to four-wheeler space, Maruti, Mahindra and Mahindra continues to remain our preferred bet as well, and both the stocks are looking strong on the chart.
Okay, all right. Let's take one stock in focus. There's a block deal that came in for the counter. That is your Kotak Mahindra Bank. Around 3.2 crore shares have been exchanged on the black in a large deal as well in the pre-open block deal window as well. Now the shares that have changed hands, it is at an average price of about 1,941 rupees per share as well, taking the total transaction to about 6,000 crore rupees itself as well. Of course, the buyers and sellers of the transaction are not known as well, but the sources and reports have been suggesting that Japan's Sumitomo was expected to sell an entire stake in the company via the block deal as well. But yes, Kotak Mahindra Bank, that the stock has been quite range bound in the past 1 month as well. Nilesh, what can we watch out in today's trading session? Of course, there's a large block deal that has taken place today. But from a near-term perspective, how would you view the stock?
Looks like stock is reacting on a positive side after that block deal. Now coming to technicals, as you have rightly pointed out, we are witnessing some bit of range-bound activity in this particular counter. But if you pull up last 2 month chart, you can clearly see the stock has formed a good base formation at 1930 level. So 1930 is acting as a very strong support. And from a risk and reward perspective, looks very attractive at current level, and long position can be initiated. We can expect a pullback move to continue towards 2020 to 2050 on the upside. 2050 is acting as a major resistance, and a breakout over that will be considered as a short-term bottom for this counter. So for that, one should wait for that breakout above 2050. But at present, a long position can be initiated, keeping a stop loss below 1930. It's a buy.
Okay, all right. Let's also talk about another stock in focus, that is your Samvardhana Motherson. The company has completed the acquisition of the remaining 25% stake in the two of its Turkish subsidiaries, and the deal has been executed by Motherson SAS Turkey, the company's wholly owned indirect subsidiary as well. Recently, the stock did see some good moves on the back of its ambitious 5-year plans. Nilesh, what can we expect for Samvardhan Motherson?
Structure-wise, we have seen some bit of consolidation in this particular counter as well, but it is on the verge of a breakout. A break above 100 level will be a good buy for this particular counter. Looks like it has taken out that important level after today's opening. So looks strong on the chart. Can be bought for 105 target, keeping a stop loss below 98. So risk and reward is also looking positive. It has crossed all short-term and long-term moving averages today. So it's a buy for 103 and 105 target. Stop loss should be at 98.
Okay, stop loss would be at 98. That is something that we need to watch out for. But yes, first rates coming on your screen. We are off to a very positive start and a very solid note. That is where the Nifty has opened above that 24,950 mark as well. We've reclaimed those levels. We are on track for 25,000 itself. But yes, 0.4% gain coming in for the Nifty as well. We've trimmed some. We're trying to trim some of its the open gains, but yes, still up by about 98 points itself for the Nifty as well. Sensex also doing well, nearly 300 points uptick coming in for there as well. 0.3% gain coming in for Sensex. Bank Nifty is also off to a positive start, 0.3% gain coming in there too. And largely, if you look at the market breadth, that is indicating a very positive start for the markets as well. India Wix is further cooling off. 0.7% downtick coming in for the counter. And of course, if you look at the majority of the sectoral indices have been doing quite well. Nifty IT index once again holding well in today's trading session. 1% uptick coming in for Nifty IT index. Broader end of the markets, if you look at the mid cap and small caps also, they've been holding well in this market as well. Mid caps up about nearly 1% itself. Small caps also nearly by up about 1% itself. Both of the small cap and mid cap indices have been outperforming the markets at this point of time. Let's take a look at some of the sectoral indices. All of the sectoral indices have opened in the green. So that's a very positive sign for the markets, given that we were hoping for a positive start. The global cues had remained quite positive. US markets had ended the day largely on a record high. Asia Pacific markets were on a higher start as well. And of course, we did see some good comments coming in from President Donald Trump as well, where both the sides are expected to come close to an agreement when it comes to the tariff deals, and that is what has sparked the optimism in the markets as well. But yes, Nifty IT index once again holding strong, nearly 1% gains coming in for there. Nifty Realty also moving higher with 1% gains. If you look at the other sectoral indices, be it your FMCG or metals, all of them nearly 0.5% to nearly 1% gains coming in for there as well. So yes, we are off to a positive start, and that is what has been indicating with the markets as well. But yes, let's take a look at some of the top gainers and losers on the Nifty 50. Kotak Mahindra Bank reacting well to its block deal news, 1% gains coming in on the Nifty 50. L&T also doing well, 1.2% gains coming in there as well. Dr. Reddy's Lab extending its gain to second consecutive day with about nearly 1% gain. Jio Financial doing well, 1% gains coming in there too. TCS and Cipla, some of the other gainers on the Nifty 50 as well. However, on the losing end, Maruti Suzuki with about nearly a percent, flat to negative start for Maruti Suzuki. Hero MotoCorp also seeing some bit of a profit booking once again in today's trading session. So yes, auto stocks continue to remain on the sidelines on the back of some profit booking, which would be expected given that the majority of the auto stocks did see cheer on the back of the GST measures as well. But yes, one stock in focus, let's talk about that as well. That is your Thermax. The company did infuse about 115 crore rupees in the arm. First Energy to support investment. The stock has been building quite good gains today, 5% gains coming in for the counter. Nilesh, what can we expect the near-term momentum to be for the counter?
Today we have seen a good spurt in this particular counter and also the stock has broken out from its 1 month consolidation. So a follow-up move seems likely towards 3600 on the upside. So if somebody has already bought it, then stay put is the advice, keeping a stop loss below 3370. Fresh long should be avoided because we have already seen a spurt close to 5% today. So the risk and reward is not looking favorable at present level. But if at all you see any dip towards 3400, that can be used as a buying opportunity, keeping a stop loss below 3370, and 3600 kind of levels can be seen on the upside.
Okay, let's take another stock in focus where we did see a good brokerage. That is your Indus Towers. 1% gains coming in for the counter, where Kotak Securities have upgraded the stock to a buy at this point of time, and they've given out target price of about 400 rupees as well. So yes, Indus Towers doing well on back of that. If you look at today, 1% gains coming in there for the counter as well. But yes, Nilesh, how does the near term look like? Today the stock is trying to build good gains from the September lows, up about 8% itself.
Well, Lavisha, if you just pull up last 1.5 year chart, you can clearly see the stock has formed multiple bottoms at 310. So 310 has acted as a very strong support recently once again, and we are witnessing a strong rebound from the lower level. So again, we can expect a pullback move to continue towards 370 to 400 levels on the upside. So near term target could be somewhere around 390, 400. Short term target could be somewhere around 370. So it's a buy keeping a stop loss below 335, and ideal buying range should be in the zone of 340 to 345.
Okay, 340 to 345. That is what we need to watch out for Indus Towers as well. Let's take some of the viewer queries that is dropping on our live feed. The first query coming in from Debu K. He's been asking the views on SBI and Bank of Baroda for an investment. How would you suggest the charts look like for both of these counters, Nilesh? Because given that you have been indicating that Bank Nifty has been lacking some participation in the past couple of sessions.
From an investment perspective, it is advisable to pick quality stocks within the banking space. So, as rightly pointed out, State Bank of India, it's a good bet to be in your portfolio. And these are the good levels as well, because we have already seen an underperformance in the Bank Nifty. And from here, the risk and reward is looking attractive. So, SBI is a buy. Within PSU banks, we continue to remain bullish on this particular counter, and position target comes somewhere around 900 plus. So that's the 6 month plus kind of time frame if somebody is looking for. Then 900 to 950 kind of levels can be seen, and 780 should be your stop loss, because that's the very strong support for this particular counter. Now coming to Bank of Baroda, it has a very strong support somewhere around 225. So 225 first of all should be the stop loss, and Bank of Baroda is also a buy from a positional perspective. It can move towards 280, 300 from a short-term perspective. 240, 245, 250 in fact can be seen from a short-term perspective.
Okay, all right. Those are the levels that we need to watch out for the counter as well. Let's take another viewer query. Raj has been asking the view on Paytm from a short-term perspective. Of course, the stock has been on a secular uptrend from so far this year itself. But Nilesh, past 1 month has been also quite good for Paytm. 8% uptick coming in for the counter.
Absolutely. So this has been the 7th consecutive months of gain if you see on the monthly time frame chart. So quite possible that we may see some bit of profit taking, because the MACD has given a sell crossover. So the momentum seems to be exhausted. There could be possibility of this profit taking to continue further. But it's not a sell. In fact, if you see the levels of 1150, 1170, that can be a good entry point. So it's a buy and decline kind of structure. But wait for a right entry. 1150 could be a good entry point. Keeping a stop loss below 1100, it's a positional buy for 1300 to 1350.
Okay, all right. Let's take another viewer query then. We have Nana Prakasham, who's been asking the view on TBO Tech on how the counter looks like from a near-term perspective. Of course, the stock has been building good gains from August lows, up about 25% itself. And, brokerages have also been quite bullish on the counter after its US acquisition. But Nilesh, from a near-term perspective, can we expect more gains to get built in for the counter?
Right, so we have seen some positive development last week, where we have seen a big breakaway gap in this particular counter, and that breakout was seen at 1500 level. So first of all, for any long position, one should keep a stop loss below 1500, and gradual up move towards 1800 kind of levels can be seen in the near term. So that's a positional target. But ideally, if you see the pattern, the stock has been extremely volatile. So keep an eye on that volatility as well, considering the same 1500 should be your stick stop loss, and ideal buying range should be somewhere around 1550 to 1580. 1725 and 1800 are the levels can be seen in the near term.
Okay, 1700 levels that can be watched out for TBO Tech as well. Let's take another viewer query on that note. We have Komal Makhija, who's been asking the view on HDFC Bank for a fresh entry for a long-term perspective. We did discuss about SBI and Bank of Baroda and Nilesh earlier, but HDFC Bank, what's the next level that you can watch out for? The stock has been fairly range bound in the past couple of sessions.
Right. So, in fact, majority of the private sector bank are going through some bit of time-wise correction as well as price-wise correction, and that's the reason the bank Nifty is not able to participate and perform. So, overall, HDFC Bank, from a positional perspective, it's a good bet to be in your portfolio. But ideal strategy to buy this particular counter should be in a staggered manner because there could be possibility of some bit of gradual up downtick going forward. So buy in multiple tranches, it's a definitely a positional buy. 920 should be your stop loss, and a gradual up move towards 1050, 1100 kind of levels can be seen in a 1 year time frame kind of time horizon.
Okay, all right. Those are the levels we need to watch out for HDFC Bank as well. Let's take another viewer query. We have Alex who's been asking the view on Bharat Forge from a medium to long term perspective. Nilesh, what is the view on the counter? Because the stock has seen relative underperformance given the tariff news has played out. But in the recent couple of sessions, the stock is seeing a good breakout. What would you anticipate the near term holds?
Right, Lavisha, it has in fact given a good breakout today. It has crossed its long-term 200 exponential moving average, and also it is trading well above its 50-day moving average as well. So some bit of positive development can be seen from a short-term perspective, and 1320, 1380 kind of levels can be seen in the near term. But a major breakout will come only if this particular counter takes out 1380 levels on the upside. So there's a kind of a double top pattern can be seen in this stock, and post that breakout probably we can see a move towards 1500 plus as well, but for that one need to wait for some more time. But at present level it can be bought keeping a stop loss below 1160, and a short term target could be somewhere around 1360 to 1380.
Okay, 1380. That is what we need to watch out for Bharat Forge as well. Let's take another viewer query. We have NextGen who's been asking the view on Kalyan Jewellers on how the counter looks like. Of course, the stock has been an underperformer so far this year, 25% downtick coming in for the counter itself. What can we expect the near-term holds, Nilesh? Can we expect further underperformance from Kalyan Jewellers?
Absolutely. So the stock is witnessing selling pressure at the high level. It is trading well below its all long-term and short-term moving averages as well. So structure-wise, looking slightly on a negative side, we may not see a major crack, but yes, gradual price-wise correction, time-wise correction is something that we can expect in this particular counter. So for 470, 460 kind of levels can be tested going forward. And if it breaks above 550, then only it's a buy, otherwise it's an avoid.
Okay, otherwise it's an avoid for Kalyan Jewellers. Let's take another viewer query. He's been asking on Whirlpool India, what is the view on the short and medium term perspective? Majority of the consumer durable stocks did see some cheer on the back of the GST news itself, and Whirlpool India also did see a good breakout as well. Nilesh, what can we expect in the near term holds? Today the stock is down about 0.7%.
Right. In fact, this stock has not done that kind of, we haven't seen that kind of momentum in this particular counter. In fact, it is witnessing more sort of a consolidation. It is hovering near about its 50-day and 200-day moving average. And 1400 is an important level to watch out for on the upside. If it breaks 1400 barrier, then there could be possibility of a strong momentum towards 1500 to 1600. So from a short term perspective, watch out for that particular level. And on the lower side, good part is that it has a very strong support at 1270. So ideally that should be your stop loss if you have already bought it. If somebody is looking to make a fresh investment, then I would suggest better wait for this counter to break 1400 level on the upside.
Okay, all right. Let's talk about certain textile stocks today because they have been seeing good once again breakout. Given the underperformance on the back of tariff volatility has been on the back burner for all of these counters. Gokuldas Exports seeing about 8% gains. Welspun Living still about nearly a 9% gains coming in for there as well. But yes, from a textile stocks perspective, Nilesh, what would your stance be? Is it a time to buy or still something to wait and watch out for?
Well, all these names that you have just pointed out within textile space, we have seen a lot of underperformance, and as of now, we are merely witnessing a pullback move. Although this pullback seems likely to extend further. So as far as GOKEX is concerned, 850, 870 kind of levels can be seen on the upside on the back of momentum. Today we have seen a good price and volume breakout. So strong possibility of a follow-up move towards 850 to 870 in a very short-term time frame, and 770 should be your stop loss. Coming to Welspun Living here, it's a similar setup to what we have seen in GOKEX. So 119 should be the stop loss, and there could be possibility of a follow-up move towards 128 to 130 on the upside.
Okay, since we are talking about the export-oriented stocks, let's also touch base on some of the shrimp stocks which has been seeing good buying interest today. Apex Frozen Foods up about 15% in today's trading session. Avanti Feeds also doing well with about, nearly 7 to 9% gains for the counter as well. How does the chart look like for both of these names, Nilesh, for you?
See, this space has gone through some bit of correction in the recent past, and now today, after a long consolidation with the negative bias, today we have seen a big gap up opening in this particular space, and that's certainly on the back of some news. So there could be possibility that we may see a follow-up move on the upside to continue, but not looking promising to take any fresh entry at current price because we have already seen a spurt of over 10% in both the stocks. In fact, this particular space as of now is an avoid, not looking attractive from a risk and reward perspective. So it's an avoid.
And avoid at this point of time. Let's take another viewer query on that note. We have we have Payal Kalra who's been asking the view on Wipro, on how does the counter look like. First, we did see some buying momentum emerging in the IT stocks yesterday itself, and today also Wipro has been doing well, nearly 2% gains coming in for the counter. But yes, from an individual perspective, what is your view, Nilesh, for Wipro?
Well, Lovisha, if you pick any large cap IT from a risk and reward perspective, it is looking attractive as a positional buy because we have already seen a decent correction across all large cap. In fact, mid cap and small cap ITs have also seen a sharp decline. Now, at present level, all these stocks are available at a corrected price. So, looking attractive from a positional perspective, even if you see Wipro, it has a very strong support at 240 levels. So, that should be a stop loss. We can expect a move towards 265, 270 from a short to medium term perspective and positional perspective. Quite possible that it may revisit the levels of 300 as well. So that's a positional buy. These are the good levels to pick quality IT names.
Quality IT names. Let's also talk about another viewer query that is coming in from Nitin Shahji. He's been asking the view on Himadri Speciality, on how the counter looks like. The stock has seen a good breakout and it is up about 4% in the past 1 month. However, the stock has been an underperformer so far this year. Nilesh, any views on the counter, Himadri Speciality?
Well, Lavisha, just correct me if I'm wrong. Are you talking about HSCL, which is currently trading at 465?
Yes, that's right.
Right. So this stock, in fact, has gone into some bit of consolidation, another, sideways kind of structure. No clear trend as of now, but good part is that it is trading at its multi-month lowest level. So from a risk and reward perspective, it has a very strong support at 440, 445. So ideally, that should be the stop loss for the long position, and we can expect a pullback move to continue towards 485 to 500.
Okay, all right. Just one last question before we let you go, Nilesh. Any picks that you want to highlight at this point of time? You've seen good momentum in the markets. This week also, throughout, we have seen good buying interest.
Absolutely. So, in fact, Nifty is also hovering near that crucial breakout zone at 25,000. So that needs to be watched out for. If at all we see any decisive breakout about 25,000, we may see a short covering rally to continue. So yes, a couple of buy recommendation from our side. First of all, Chennai Petro, this particular stock is looking positive for a follow move to continue towards 750, 770 levels on the upside. 705 should be the stop loss. Apart from that, if you see a couple of hospital names, in fact, Apollo Hospital specifically, this particular counter is looking positive for 8,000 plus kind of levels, 7700. In fact, 7700 should be the stop loss. Talking about IT names, we did mention about Coforge that is looking attractive and looking strong on the chart as well for a follow-up move to continue towards 1800 plus from a short-term perspective, and 1720 should be the stop loss.
Okay, those are the stocks that we need to watch out for. But with that, we have to let you go, Nilesh. Thank you so much for your time and connecting with us. All right, let's take a quick check of the markets. The bullish momentum continues in today's trading session, given that US President Donald Trump has indicated some thawing of relationship with India as well. And that is what has sparked the optimism in the markets as well. But yes, let's take a look at how the Nifty is standing at this point of time. 24,950, 987, that is where we are at. Sensex up about 300 points as well. Broader markets also reflecting the optimism, both the benchmarks and outperforming the benchmark indices as well. Nifty IT index building on to the gains, 2% uptick coming in for the counter as well. However, Nifty Auto Index continues to remain the top laggard with about nearly 0.5% decline on the back of some profit booking which is taking place on the counter as well. But yes, majority of the sectoral indices, all of them are in the positive territory, be it the likes of Nifty Realty Index or else Nifty Metal or Nifty Pharma Index, all of them seeing good gains in today's trading session. So yes, but if Super Pro, if you need, we'll be introducing your Money Control Super Pro, which will be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro is where your serious investors can stay ahead. You can download the Money Control app and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have Aishvarya Dadheech, founder and CIO of Fident Asset Management, joining us. Aishwarya, good buying interest in the markets coming in, Nifty above that 24,900 on the back of some relationship thawing which is expected on US-India front. What are you expecting? What can the next moves be, given that today we are seeing some export-oriented themes also back in action?
Good morning, everyone. Lovisha, nice to be here. So basically what has happened, if you see the last 1 week, Trump has commented about India in at least 3 tweets and with a positive bias. And possibly this is the conundrum which market was trying to struggle with over the last 3 to 4 weeks, has basically getting some respite or breathing space. That's why we have seen that kind of rally momentum which is picking up in the market over the last week or so. But at the same time, we have to also understand that if we look at how India has done compared to other emerging markets, that doesn't look out a very bright story. India has allocations or the holding of the overall emerging market MSCI index has fallen from almost 20% to 16%. And the reason for that is if you see how India has done compared to other emerging markets, equities, where majority of the index, if you see the last 12 months, they are up almost 15-16%. India is actually negative -2%. And this is all on account of the kind of FI outflow which we have witnessed, especially in this calendar year so far. I think we are almost closing to $16 billion of outflows. And that's all because of the uncertainty or the geopolitical risk all associated with the Indian tariff. We've also seen that impact on Indian rupee, which almost slide down to all-time low very recently. So to be honest, not in a very great position from the market perspective, but obviously some signs which is visible with this kind of communication which is coming is giving the much breathing space to the market. And I believe if we possibly will see at least 25% of that additional thing, if it gets away in the next, say, month or so with those negotiations on around, we can see some better time for Indian equity market before Diwali.
Before Diwali itself, all right. Aishwarya, let's also talk about IT stocks because they have been buzzing on the back of the Infosys news and of course the Fed rate cut which could be possible as soon as next week itself. And the street has also been trying to relook at it as a contra-backed. Would you also relook at it or remain conservative until the real growth is visible for majority of the IT pack?
So at Fident, I would say we are running this contra from the last couple of months. We have gone massively overweight on IT. Not many of the market participants are doing that. The reason is obviously like I say, when we have met majority of the management over the last 2 weeks, the one thing which it came out very clearly is that the macro hasn't deteriorated. Deal pipelines are looking very strong. Obviously the deals are more ROE focused, more on cost takeout, but the deal pipeline continues to be robust. Sectors like BFSI, retail are doing very well, and they are not seeing any pressure on any particular vertical except for some logistics or commodities where Indian IT services exposures are pretty low. So the growth in IT, I believe market will be surprised to see that stability which will come over the next 2 to 3 quarters. And on top of it, as you said, now we are very close to Fed cutting rates, right? There's a 99% probability that we will see a rate cut next week. And there's almost like 3 to 4 rate cuts expected this calendar year itself. So with the decline in the interest rate, I would say because of stability in the growth, and most important is valuation. So if you see the IT index is down almost 25%, and I believe that is a place where we can create alpha in the coming time. So we are very positive on various of these mid-size IT services companies, and we have gone overweight on account of that. So overall, very very positive on IT per se.
Positive on IT per se. Aishwarya, let me get your view on export-oriented themes. Today they are back in action as well, be it your auto ancillaries, textiles, or even for the matter of shrimp stocks as well. All of them are doing well in today's trading session because they're hoping that some trade talks would materialize on that front. But what would you advise an investor to still stay away at this point of time, or how should they position themselves?
Yeah, so obviously, when this stalemate is getting some expectations of a solution, sectors which were hit the most are expected to see the bounce. And that's why we are seeing good momentum in textile stock today and other export oriented stories. But I believe we are still not out of the woods. Market investors has to be cautious on understanding what kind of businesses they are putting their money into, and whether these businesses have that kind of moat around themselves to settle around any of the negotiations outcome which will come out in the next couple of months. Having said that, we at Fident are very very positive at auto SS space. Now, Lovisha, we have to understand this thing that if we really look at some data points, suppose two-wheelers is one category in auto, and if you look at the data on annual basis for the last 4 5 years, the total two-wheeler which were sold in India before COVID, it was close to 2.1 or 2.2 crore in an annual number. Right now, even after 5 6 years, we haven't reached that. Last year, we were close to 1.9 crore number. So if I connect this, with the way GST rationalization has happened, I believe this is a very big momentum for the kind of growth that we have seen. When I see the same number for four-wheelers, we are seeing that that number is much higher. We used to sell 35, 36 lakhs of car before COVID. We are almost at 44, 45 lakhs car, which is sold on annual basis in India today. But that number is not there in two-wheelers. So once thesis is there, whether the penetration has really gone to the peak, but we at Fident, we believe that there is a lot to do with the purchasing power at the lower part of this pyramid, right? And because of this huge benefit on GST rationalization, I believe this is one of the larger reforms which will have a very positive cascading effect in the coming times. So we are very positive on auto, and as you said, like the themes on export side, large part of the export, 20 30% of a lot of these auto companies have a good export business. So I think that will also have a good tailwind around that. But coming to other sectors, I'm very positive on pharma. We believe chemical is one sector which is also export oriented, should do really well when I'm looking at various of these data on monthly basis. And obviously textile, we have to understand how the whole scenario plays out in the coming month.
Okay. Apart from autos, anything else that you're watching out from the consumption space in particular, given that GST reforms is also at the talk of the town at this point of time?
Yeah, so we are very, as I said, I'm very, very excited about the whole GST stuff. And I believe one sector which should also benefit out of this is your FMCG, right? If you see the last 3 to 4 quarters, we have seen that rural growth has been pretty strong. At times, it has been faster than the urban growth, thanks to all the private public capex which government has been putting up, higher yield on crops, better your acreages, and better rural income. And at the same time, because of the tax cuts on or because of this budget, we expect that rural economy alongside urban economy is also expected to see growth coming through. And on top of this, we have icing on the cake in the form of GST rationalization, especially on mid and the lower strata, where we believe the demand can revive significantly in the next 4 to 6 quarters. So we believe alongside auto, FMCG is also one play which should do really, really well. If you have seen the last couple of months, a lot of these large cap or even mid cap FMCG stocks have gone up 15 20% in expectation of that. And we should not forget that FMCG stock has been lagging or lagging behind over the last 4 or 5 years. So there's a lot of catch up that they have to do, and they have the right ammunition with them to take on that part. So we are very positive on FMCG alongside auto on account of this GST rationalization thing.
Okay, okay. Let's also talk about cement stocks. You know, they have been buzzing on the back of this GST cut news as well, Aishwarya. But do you believe that affordable housing stocks could be the dark horse, given that the construction costs are expected to come down tremendously by about 50-60%? That's what the entire reports have been suggesting.
And yes, we completely believe in that. And if you connect the dots, the continuous focus of government on housing as a space, puts more, fire to the fury. So we believe that housing is a space we should do really well in the coming couple of years. And at Fident, what we're trying to do here is we are trying to play through housing finance companies. If you see their numbers over the last 4 to 6 quarters, there is a remarkable improvement in the ROEs of these companies, right? And they have been putting up a good growth, whether it is the likes of Aptus, Home First, India Shelters, and places like that. And we believe that particular space looks pretty sweet from growth as well as valuation perspective. On other side, because of the element of housing, more than to cement, we are more tactically buyer into say pipes or possibly wires and cables and possibly those kind of space which are a proxy play on housing. We are obviously believe that cement stock, as you particularly mentioned about it, will be the bigger beneficiary of the GST reforms. I've been tracking cement for last 20 years, and I can tell you the volatility or basically the sensitivity of pricing to the EBITDA and the PAT is very high in cement stock. And much of the analysts will appreciate that these kind of saving on account of GST can really put up a good amount of volume growth, which will flow for your better profitability and growth for cement companies. But there's one element where we make us not go all over the cement is the valuations. So the valuations of the stock has to be seen in conjunction with the growth, and we believe there are better opportunity in other housing based themes which can create better alpha in the coming times for investors.
Okay. Ashwar, you mentioned a whole host of themes that you've been bullish on, be it your auto or even IT for that matter as well. Any pocket that you're still wary about?
We are staying away from Lovisha real estate. That particular one piece, in spite we know that there will be another rate cut possibly, but real estate has been out of our radar since many months. And I think that's even the portfolio. So the real estate index is down almost 40-50%. I somehow believe that we possibly, at least on the residential side, we are reaching around the peak of the volumes. All the data which is coming to on Mumbai, Bangalore, and Hyderabad is someone's giving us that this is one area possibly I will stay away. Second is obviously on gold based companies, which basically we have seen how the gold prices has moved up. It has almost up 45% in this calendar year so far. And I believe there will obviously have a deterrent impact on the volume growth of many of these gold-based retailers. I'm not talking about gold financiers, but it's more about players like who are into gold jewelry and things like that. So I believe the valuations are pretty staunchy there, and I am not very excited to see whether the volume growth will come. Obviously, there will be price-led growth of 20-25%, but volume can remain, market can get surprised to see volume going down. Our interaction with many of these companies, they highlighted us that people are going down below from 22 carat to almost 18 carat or as low as 14 carats. Studded is still very good, doing good, but diamond prices have gone down. So this is one sector we are completely ignoring.
Okay, all right. All right, with that, we have to let you go, Aishwarya. Thank you so much for your time and connecting with us.
Thank you so much.
All right, let's take a quick check of the markets of where we stand at this point of time. If you look at Nifty, Nifty is still quite well above that 24,900 mark at this point of time. 995, that is where we are at for the Nifty 50 index as well. If you look at the broader end of the markets, mid-cap and small caps, both of them still nearly up about 1% itself and outperforming the frontline indices. Let's take a look at Nifty IT index, still building onto those gains. up about 2% itself in today's trading session itself. Majority of the gains that is coming in from the IT pack is also coming in from TCS, Infosys, HCL Tech, Wipro, LTI, Mindtree, all of them up about nearly 1 to 3% itself in today's trading session. On the other hand, if you look at Nifty PSU banks, that has also been soaring in the trade, 1% uptick coming in for the counter. Nifty Realty Index, it was up about 1%, however, it's trimmed some of its gain and it's now up about by 0.5% itself. Nifty Pharma also trimmed some of its opening gains, up now with about flat to positive 0.1% gains coming in for the Nifty Pharma Index. All in all, it's a positive setup for the markets, and we'll watch out if this gains sustain and we can actually clinch that sixth day of gains for the Nifty 50 itself. But yes, we will be introducing our Money Control Super Pro, which can be our ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI-registered experts, pre-identified chart patterns and AI-powered stock alerts on WhatsApp to help you trade and invest with confidence. Super Pro is where the serious investors should be staying ahead, and you can download the Money Control app and subscribe to Super Pro today itself. All right, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we'll be discussing about what the stocks have been in focus and how the market is developed. Until then, signing off.